Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey, good afternoon, everybody. This is David Blake with Tuesday Tech Talk. If this is your first time attending, I want to thank you for joining us. And what we're going to do is take about 20-25 minutes looking at some different charts and sectors. And then at the end, we open it up for some questions from you. It could be about anything, individual stocks, different markets, sectors, industries, whatever's on your mind. Okay, as has been the case the last couple Tuesdays, Monday got off to quite a start here, to say the least. They opened up after the previous Friday's run, which ended up being, I think, the biggest one-day reversal since about 2011. But anyway, okay, last week the Bears gave it their best try to take out, push us down to the October lows. We were down about 312.78 points losses on the Monday. On that Friday, we actually were down 258 points negative for the week. It turned around on a dime. We ended up being up about 200 points at the close. Yesterday, we added another 304 points. So the S&P 500 is up about 5% from that low. Which is quite a move. That was actually the strongest move we've had in the market all year long. Also last week, the big news was that the jobs report that came out on Friday put accommodative monetary policies back on the table. That was what basically caused the rally. They're probably looking now possibly March before they raise rates. But the thing about that is that does put kind of why the market ran up so much in the summertime and kept us in that trading range. The problem with that is you have a market now that may be rising again on weak economic data, lower corporate earnings, and that's not really the best reason to be going all in on the market. Today, another crazy day. Well, actually yesterday, let's look at that real quick. We had a big jump on General Electric, which helped the industrial sector. Crude oil had another big jump. The energy sector jumped 3.5%. The materials sector was up 2.9%. Industrials were up 2.64%. Had a nice little boost for the technology sector on a 10% move in Micron. And the Dow, like I say, added 304 points yesterday. That was 1.85%. The Russell 2000 and the Dow Jones Transportation Index outperformed, with the Russell up almost 2.5%. So the indexes ran right up to about their 50-day moving averages for the Dow. The other ones were a little bit, didn't quite make it there. But this morning we opened up higher, and you actually did see the most of the averages got to that resistance level. And unfortunately, if you're a bull, we didn't make it above that level. Sentiment still remains quite bearish in the broader market. We saw last week that the bullish investment advisors had fallen down to 24.7%. That was the most bearish reading on that since March of 2009. And actually, at the low of the financial crisis in 2008, it was only down to 22.4%. So we are seeing extreme levels of bearish sentiment, which you will find at a bottom. And right now, we're still trying to determine whether a bottom is in or not. And one good point here on the Dow. In the last week or two, we've actually tested the 16,000 level about 4 or 5 times, and that seems to be holding at this point. If that would break, again, that would probably give us a little bit of a send down, a little bit towards that August 24th lows. Here's the first chart on the Dow Jones Industrials. As you can see, this week we put them up in black. I had some emails that said that they could see the chart better in black than white. I'm not so sure about that. As you can see over here on the right here is the 50-day moving average coming down, and that's right where we closed yesterday. And that level is right here around 16.8, right around that area. And that's the first time since July 20th that the Dow was able to move above that level. The fact that it's a descending moving average is a little bit bothersome, but it still looks good. The different indicators down here show some improvement. This is a 30-day stochastic oscillator that I look at, which is nice. It's showing a trend change. It crossed over 50, which is good. We had the 14-day RSI popped its head above 50. We also got a buy signal on the MACD-LT, which is bullish. That is an intermediate-term trend identifier. Now, the other negative thing on this, we did not take out the high from about 2.5, 3 weeks ago from mid-September. So this is still suspect. We did take out the descending trend line from going back here for the summer highs. But again, we're backing off today. We're flat, so we're trying to battle that 50-day. Okay, next chart we're going to look at real quick. Here's the S&P 500. We did not break the 50-day on that. That's right here around 2,000. We got up to around 1990 today. Let's see. What you want to look on here is the 2020 area, which would be right around this area here. That's going to represent around the 50% retracement level that we talked about on a few of these. Until it breaks that area, we're still in a series of lower highs and lower lows. Now, right over here, last week we did come down, and you could actually say we had a double bottom on the S&P 500. Again, if we get a sell-off again, it comes down here and breaks that. That's going to determine whether this is a longer-term, bear market, or whether we're just still in a correction that we could get a little rally towards the end of the year. Okay, look at the NASDAQ. It was a little bit weaker yesterday. It didn't quite make it up to the 50 either. We did have a nice gap up. The 14-day RSI hasn't quite made it into positive territory yet, and we did not get a buy signal from the MACD either. 50-day and descending trend line will come into play around 48.60, but I think the NASDAQ actually needs to trade about above 49.60, which would be up around here, to break that pattern of lower highs and lower lows. Okay, another index I want to look at real quick. This is the Dow Jones Transports. It was nice yesterday. It also traded back above the 50-day moving average. I've thought for a long time this average kind of holds the key as to whether or not the market's going to rally much from here. We do have a descending trend line that's going to have resistance, and it's going to have to get up right around 8,300, I think, before we can ring the bell that's going to show this. Now, we're going to talk a little bit about what crude oil is doing here in the last couple of days, because it's really turned on a dime and is much stronger than what we wanted to look at. But again, we want to see this take out this descending trend line, break above this resistance level here around 8,300 before we see much more improvement in that. Okay, let's look at real quick at the next some of the internal breadth readings. First off, we look at this regularly. There's the NYSE advanced decline line. Again, we have a double bottom here on the showing that we are under accumulation over here. Yesterday's action actually took this above this 318 level, which is bullish. Today, I think which is probably about 50-50, I would say right now. But that's a positive sign. That is starting to break the lower lows and lower highs scenario that we've been seeing since midsummer. Here's the NASDAQ, not quite as impressive. It's been underperforming the Dow recently. Let's see. Granted, former high flyers have made a run in the last couple of days. The healthcare stocks, however, are really crunching this NASDAQ. And I just wanted to bring up real fast today, despite a better open, XLV, which is the healthcare sector, is off today about 3.7%. Right now it's off 3%. We had the iShares NASDAQ Biotech Index. The symbol on that is IBB. That was down 6.5% just about a half an hour ago. That looks like it's going down to 260, and it's going to be hard for this market to keep on pushing forward with that down like that. I'm not sure if there was any outside news on the healthcare and biotechs, but 6.5% move. We were down 24% from the highs last week, so that's getting to the point where we're almost down 30%. Okay, also before we look at this next chart, yesterday was the first time we always look at the new 52-week highs and lows. Monday was the first day that there were more new 52-week highs and lows on both the NYSE and the NASDAQ. And that's only the second time that that's happened since the 1st of August. So at least we're seeing some contraction in that for a change. We've had more new lows and new highs for about almost 2.5 months. Okay, I want to bring a couple things that might also give some credence to this rally. If you look at some intermarket analysis relationships that a lot of traders will watch, one is that when you have a strong U.S. dollar, commodity prices go down. This is a comparison chart right here. This is the ETF UUP for the U.S. dollar, and this is DBC, which is the Power Shares Commodity Index. As you can see, as this works its way higher, this keeps rolling over. Now the DBC is, I think it's about 55% energy and oil and gas. It's got about 20% metals, about 15% grains, and about 10% more of other mixes. But you can see this is starting to show some improvement down here. Whether the dollar can keep on sliding, it's down about 0.5% today. That's giving a nice boost to the commodities. We actually are getting a falling below the 50-day moving average on the U.S. dollar too. So that's something you want to watch. And the reason I'm bringing that up is that some of the commodities such as oil, gas, cocoa, wheat, copper, silver, you used to have to play these in the futures markets where you were leveraged about 20 to 1. It was a really risky trade. You can actually buy these different commodities in ETFs. We'll go over some of the different symbols that look like it has some good-looking charts right now, but they're so beat up down here that you're actually going to have. You can actually go in here and get some trades on some commodity markets like oil and gas, oil exploration. Coffee looks good. Some of the grains. We'll look at some of those later on. But it's a way for you to participate in different ETFs that have just gotten crushed over the last year or so. And you're going to get a bounce in them, especially if the dollar breaks down from here a little bit. And the fact that we may not raise rates till March should put some downward pressure on the U.S. dollar, which will allow you to make some money on these ETFs. Okay, again, this is the dollar versus the commodity. Some economists will point to this over here. That this is partially due also to a China slowdown. But if you compare DBC to China, you can see that China was still going up when that was going down. Okay, this is just a 1-month chart. This is the commodities yesterday. We've been going back and forth where the dollar has been kind of going sideways. The dollar was flat, but here you can see this as a comparison chart. This is the commodities yesterday just having a huge move. The intermarket analysis rules are important because they're going to tell you what should happen. And this is telling you that it's actually outperforming. When you see something like that, it's just because it's so oversold that you're going to get big swings due to the weak dollar. Also, you saw the oil go up. This is the DBC, so that big move in oil yesterday has also put some pressure on that. Okay, here we are yesterday. This is the oil and gas exploration. This would take into consideration some of the big oil stocks like the Chevron, the Exxons, BP. All these stocks look like you're going to get a continued bounce in that. Okay, I want to take a look over here. And one other thing I want to say is that I'm still not wild about some of these sectors, like the materials and energy that have just been crushed. They're way oversold, and they need to come up and test some resistance levels before you're all clear on it. We talked about the dollar. This is the chart of the dollar. Yesterday we have a triangle pattern coming into this. What we're looking here, it's 400 triangles, but it's going to have to break one way or the other. If we see this come up through this 32.5, that's going to probably put a little stall on the overall market. All bets are off on the commodities at that point. But to me, it looks like you're seeing on the MACD and some of the other distribution, and you're seeing a little bit of distribution of the dollar, which is telling me that we're probably going to go down and test this lower arm of the triangle. And if that breaks below that, we could get that would point to possibly a little market rally going into the end of the year. Okay, here we saw yesterday one of the big winners. Okay, look at this. This is the materials sector, XLB. As you can see here, we've gone from the high 30s to about 42.5. Today we're up 1.5%, 43.06. So we're breaking through resistance at this level right here. MACD gave a buy. You're seeing the up-down slope showing that you're having a nice rise in accumulation on the materials sector. If this breaks to this area on the 50-day moving average, you could get another run back up in here to the 50% retracement level, which would be right around 46, I believe, on that one. Okay, here's the energy sector. Again, we ran right into resistance, but we took this resistance out today. We went above the 50-day moving average. Energy's up 2.19% as we speak right now. You haven't seen big moves again in Exxon, Halliburton, Chevron. Chart for COP, great looking chart. That's one you might want to look at for a oil play. And Williams Company, WMB. I would take some positions in these stocks here. It might be good for a short-term trade, but I wouldn't sell the whole position. If you buy some here, I would probably hold half for a longer-term play, and we'll see what happens with the dollar from there. In the materials sector, some charts that were looking good with Dow Chemical, DOW, Sherwin-Williams, SHW, and also I think Freeport-McMoRan has an interesting play here. They're doing some scrambling, trying to get things worked out. I think it was Carl Icahn took a big stake in Freeport-McMoRan, FCX, last week. That actually bumped the stock up around 12, and I think we're back up around that area right now. Okay, yesterday actually last week when you saw when we had the weak jobs report and the dollar got weaker, that also helps the industrial sector, which I haven't liked for a while. But I do like this. You had a nice gap up there yesterday. It bounced off of this. It had taken out the August lows, and you had a nice bounce up here yesterday back to the 50-day moving average. The industrials are flat today while the market's struggling. But this looks a little bit better, but we need to take out this mid-September high. There's a couple charts that look great on here. I want to point out that if you're looking to buy something here because you think things are oversold, the first one is Lockheed Martin. Now, I don't care whether it's whether we're in a bull run or what we're doing. This is a great looking chart. It's got a nice dividend. You're up here challenging the 52-week highs. You had the sell-off back here in August. Now we're heading out here. I would be a buyer of Lockheed Martin no matter what the market's going to do. I don't think you're going to get hurt. Even if it comes down and tests the 200, you're not going to get hurt. This is what I'd be looking to buy. Also, Union Pacific, UNP, is another stock in industrials that I think has a great looking chart. We can look at that later on when we go to the questions. Okay, here's the technology sector. You can see we fell down here. We talked the last couple of weeks about how when on the August 24th sell-off, some of these ETFs opened up without a proper bid. So this may be a little bit distorted. The actual low may have actually been over here, which means we had a double bottom. And if you see this like this, this is a W pattern, which is also indicative of a market bottom. We're running the resistance up here with the technology sector, but it's being helped by strength in the semiconductor, Philadelphia Semiconductor, and SMH, the semiconductor ETF. Charts that look great on that would be, here's the ETF. A break above this mid-September high would be bullish for the technology sector. And a good-looking chart on there I like is Intel. Here we have, on this pattern right here, you'll see a reverse head and shoulders pattern on Intel. If you take the head to where the next break line is, it's going to give you a run in Intel, probably up here at around the 34 area, which is a pretty nice move. You can probably pick up about $2 or $3 if the market stays steady right in here. Good looking chart. That would be one that I would add to. Also pays a great dividend. I think, let's see, as of the close yesterday, it pays about a 3% plus dividend. So that would be for a conservative investor. I would be buying shares of Intel here, and also you get that dividend certainly beats what you're getting off the money markets and all. Okay, here's the consumer staples. It also is outperforming. This is stocks like Clorox, Kimberly-Clark, things like that. Procter & Gamble's a stock I haven't liked for quite a while because it has a lot of international exposure. I think that stock is probably bottom too. We can look at that chart later on too. Another good paying dividend stock, which could outperform with as long as if we're going to keep rates at zero a little while longer. But here you can see the consumer staples is back up above the 50-day moving average. Ran into resistance up here at the 200-day moving average, and today it's backed off a little bit to 48.41. So we're back over here, but we're holding above the 50-day moving average, which is good. Okay, now a couple other stocks in here that I like on this consumer staples. This is a chart of Costco. You can see we have some resistance right up here. Another nice looking chart, a little bit of double bottom, broke back above the 50-day and the 100-day. Good accumulation. The MACD is showing the trend looks up. I would be a buyer of Costco. And here is probably one of my favorite charts in this group. And this is Altria Group. It's the old Philip Morris. We look like we're getting ready to break another high. It's got under accumulation, got good strength in the 14-day RSI. MACD is also bullish. We're breaking through resistance here. If you're a conservative investor, you know, hey, buy Altria in here, and you're going to get yourself more than a 4% dividend, which I think is dynamite. I wouldn't go so far as to say that this is a reverse head and shoulders pattern. Some people might say that, but this stock's going higher. Doesn't matter what the overall market is. Okay, I had some questions that came to me in the email this week before the seminar. The question was some of these international ETFs and emerging market ETFs that closed above their early entry buy price point over the last day or so. And he wanted to know, should he go all in to buy these? Or should you buy half a position and wait to see what the market's going to do? Because one of the problems was that because of this big movement here, most of these early entry prices, the recommendation was wait for a pullback because they were all overbought. Okay, this first one is CAF is the symbol for this. It's an ETF. It's Morgan Stanley's China AirShare Fund. It's a nice move off the bottom back in here. Of course, this may have been overdone, but you've had this. You're coming up almost to the 50% retracement off of this fund on the China index. It has a nice volume. You should get a trade in here. You want to watch if it can break above here. You might see get an even more move, a higher move up and around the 27 area. This is definitely back in an uptrend. This would be an actual decent way to play China's market if you think that it's kind of bottomed out. And it's also more liquid than some of the other ETFs in China, and it mainly invests in larger cap stocks. Another question came in on this is iShares all Asian countries except ex-Japan. Then we see kind of a double bottom in this kind of little W pattern. Here's the early entry buy price at around 64 or 54.5, 55. This looks like it has more room to run too. You're seeing here's the stochastic oscillator. The 30 days crossed above 50. I like the 30 days for the stochastic oscillator. It's a nice confirms the trend. Here the 14-day RSI is jumping up here around 60. It looks like it could probably go up in here in the 70 area for that. And also the MACD has given a buy signal on that chart. And the next one here that he asked about was, this is EWX. This is Emerging Markets Small Cap Fund, much more speculative in this, but that doesn't look too bad. So it's more thinly traded. Remember we talked about those bad ETF openings. So this may not have been. It's kind of hard to tell exactly where the sell-off would have taken place. I'm going to say probably right here instead of down here. So the 50% retracement on some of these emerging markets would take it from 38 to about 42. So you could probably get about another 6-7% in some of those. But these are also these emerging market ETFs are ridiculously cheap. They've been pounded. They're right now they're trading historically low PEs, and by that I'm talking PEs of about 8, 9, 10 times earnings. So they're not expensive at all. Usually you'll see some these things trading up in the 20s. So this might be an opportunity time to pick up some of these ETFs. I'm starting to get some questions coming in here, and I've already talked for 25 minutes. I don't want to go any longer than that. If you have some questions, let's kind of go over into that. I'm going to go ahead and pull up our regular chart. Let me see here, right here. Okay. Screen share. All right, do I have to close that down maybe, the file? Sorry about this. Can you see the chart on here? No? Okay, hold on a second. Where is it? There you go. We had a question, so we wanted to take a look at RIG. It's not letting me pull the chart up for some reason. Okay, well, we're not going to be able to share the chart. I'm going to look at the chart while I look at these questions over here, if you're going to pull them up. Symbol for RIG, R-I-G. Again, we're bouncing off this $14 level. We are above the 50-day moving average now. Again, it's going to go up with the energy sector, and I would be nibbling away at these positions. I'm still a believer in I think you're going to get a nice trade in this energy sector, especially with the weak dollar. But I'm not so sure that I would be, if we would get a nice 8, 9, 10% bounce in some of these stocks, I would probably sell at least half the position. This RIG has a possibility it could go up to about 21 before it's going to hit real heavy resistance. That'd be a nice trade. 14-day stochastic is just getting ready to turn positive. MACD not so much, but again, on these Halliburtons, Transoceans, some of the stocks, I would, if you're buying them for right in here because they are oversold, go ahead and do it. But when you get to the resistance levels, I would probably come out of at least half of them at that point, because the market, even though we've had this nice little move in here, if we get a jobs report or something like that over the next week or so that shows that we're that all of a sudden the economy is getting better, and they start talking about a December rate hike, it's going to whack the market again. So taking advantage of pushing the rate hike off to March for right now, you can be buying some stocks in here that I think you'll probably go up. But if they but good news is going to be bad news for the market going forward to the end of the year at this point. Any more questions in here? If you have some later on, okay, sometimes a buy stop is exceeded on a stock that's rated as a void, for example. Should I wait till rating changes, or should I take it after the buy stop is exceeded? Okay, number one, if you're shorter a stock is a void, you want to have the stock close above that buy stop for your first sign that things are looking pretty good. Another thing you also want to do is put up the up-down slope, which you can find in smart charts. That shows whether the thing is under accumulation or distribution. If you have not so much as it's above 1, but what you want to see is that the slope of that is rising. So if you have a stock that's kind of maybe trending lower or going sideways, but you're seeing the slope of the up-down ratio going up, that means that the traders are accumulating the stock while while it's going sideways, which is bullish. So some people are going to want to check maybe a day or so to make sure it closes above that buy stop at least a day or two, and we'll see. Okay, are you still bullish on oil services? I am temporarily on this big run in oil because we've talked the last couple of weeks. The $45 was kind of a barrel was kind of the line of sand for crude oil. It kept falling below there, but it's been able to bounce back above that for the last week or two. And the oil services, I think, like the Halliburtons, I guess you're talking about, maybe this rig, I think they've probably got a little bit more ways to go. They were beaten down pretty bad, and I think you're going to get some oversold rallies. Again, where they come into resistance levels and around the 50 days, I would probably take at least a half a position off at that point, if not the whole thing, because I think the market is still susceptible to another big downswing. Okay, please discuss your take on Europe. Europe also is improving. If you look at internationally developed countries, I know England looks good. See, this is the DAX. Looks good over here. I wish you could see some of these charts on here, but just to go over some of them real quick. Actually, these are equity incomes. Trying to get a couple things. Australia, I don't like Australia because it's too. It's got a double bottom over here, almost a triple bottom. Not a lot about that chart. Canada, not a lot about that. Although if the commodities can keep on rallying, the Australian dollar and the Canadian dollar both, those economies are so strong on their mining and materials that if the dollar rolls over, you could really pick up a nice bottom on those countries. Real briefly here's Sweden. Not so much. I don't care for that. Here's Germany. Germany's still. I wouldn't call this chart a bottom. If you go back and look at EWG, I wouldn't say that we've seen a bottom in all Europeans yet. Here's EWJ, Japan. For an international market, it looks pretty good. It's had a heck of a move the last couple of days. It's going up here and testing the 50-day moving average. Not a buy yet, but it looks like it's starting to try to work its way in. Belgium, another small European country, it's getting up ready to test the 50-day. Switzerland, none of these really European countries really have a bottoming. I can't really say they have a bottoming pattern in yet. They bounced hard off of the last couple of days, but I wouldn't say that they're still below the 50-day, and you're still making lower lows and lower highs on those indexes. So I probably wouldn't be buying Europe for a bounce at this point. Okay, we've gone past the 33 minutes. Looks like we have one more question in here. Okay, that was something else about Europe. Again, I don't see Europe bottoming yet. You did have a nice 2 or 3 day bounce, but if you look at the broader charts on some of these countries, and if you go to the ETF Center and Market Edge and pull up International X, you pull up Europe or International X Europe, either one, you're going to see some countries. Look at these charts, and you'll see that you're still in a series of lower lows and lower highs, which can come back and can eventually weigh on the U.S. market. But again, I probably wouldn't even be buying Europe for a bounce at this point. Okay, that's about it. I'm going to wrap it up. If you have any additional questions that we didn't get to, please feel free to send them either to support@marketedge.com or you can go to the doc@marketedge.com, and I'll get back with you later on. Also, next week I will not be doing a tech talk. I'm out of town taking my vacation. We will the following week, which would be the 14th, I guess, the 20th or something like that. So thank you for joining me today. I hope you got something out of it, and have a good week.